you all for taking the time out of your Saturday morning to join us today. Now, I've had a unique opportunity to be behind the scenes, as Reed mentioned, and what I've done is I've stepped away from the corporate world, working for and leading one of the largest financial education companies in the world. So I now have a unique opportunity where I can work individually with specific companies, products, programs that I find extreme value in. You know, when you work for the man per se, you know, you don't always get to choose who and what you work with and who you work for. So now that I'm a free agent, I really like to attach myself with great individuals. Webinar Expo is one of those groups that I've had the luxury to work with and alongside for well over, some of these guys, over 10 years. So I'm excited to be here today, and I'm excited to work with each and every one of you. But we're going to have a unique twist on today. We're going to be educating and walking through different theories, different methodologies of not only trading cryptos, but what I do and some of the products that I work with work across all markets. And that's what I really love, is diverse platforms that don't cost you tens of thousands of dollars. So what we're going to do is we're going to first start off with some basics of understanding the profits. We're here to do one thing. If you're an investor and you're in this event today, you're looking for different ways to increase your returns. Some of you are looking for simple ways to do it. Some of you want to be the most complex trader out there so you can, you know, talk the talk and walk the walk. But for me, I've always found that to keep things simple is the best way to do it. So what we're going to be talking about today is no matter what Bitcoin is doing, and crypto world is really classified as the opportunity capped or uncapped by what Bitcoin's doing. And that's just not true. Just like in the stock market, in the US stock market, if the stock market's down for the day, right, as the index is, the Dow is down, doesn't mean there's not opportunities to buy or make profits. Now, the unique thing about the crypto world, if you didn't know, you can really only buy and go long in the US. You can short cryptos, but that's going to involve trading futures on the CME, and there's only a handful of them anyways. So it's not that exciting. But as you can see here, I just pulled this morning, and here's some of the results. I've got 77% on a trading signal for Link versus Bitcoin. Tron's up 28% in 17 days. AirSwap's up 27% in 10 days. These are all buying positions. These are long calls. So this is perfect for the US investor. Nano's up over 24%. Now I'm going to walk you through how these are generated, not so you can buy the software, but more so you can understand how to pick the right coins, how to understand where to buy, where to go long, how to protect yourself, how to even know where to set your stop losses and limits in this new market. It's a new market. I mean, it's the crypto world, right? So if we take a look, this is what we're going to try to identify. We want to know which pair or cryptocurrency pair to trade right now. The best price to buy that crypto, where to set your profit targets, where to set your stop loss, and how to avoid losing trades as much as possible. No one's 100%. So if you could really identify these 5 steps and learn to recognize how to go about walking through each one of these steps over and over again and repeat that over and over again, could you be profitable and consistent, right? If you knew what to trade, where to buy, where to take profit, where to set stop losses to protect your money, and then how to avoid the bad trades. If you could do that, I think you'd be satisfied. I mean, that's really the simplest way to look at trading. Doesn't matter. You can replace cryptocurrency with stocks, ETFs, futures, Forex. Doesn't matter. But these 5 steps are applicable across every major investment. I don't know if you knew this, but when you really break it down, even right now, when Bitcoin's at $3,700, when I remember last year, this time it was around 15,000 US dollars per Bitcoin. Well, it's trading still today with just 2 exchanges at over $19,000 per second being traded right now as we speak. And that's only 2 of the exchanges. And there's well over 400 or 500 of these exchanges today. There's tons of volume. There's tons of money in this market, even today with Bitcoin at 3,600. I think I just looked at it, right? But I'm going to go through just a simple high-level walkthrough. Some of you may or may not be aware of cryptocurrencies. I'm not going to spend a lot of time diving into the definitions of this, but we're going to keep it very simple. So cryptocurrencies, same thing as a dollar bill in your wallet. It's a currency. This just happens to be digital. Now it's got all this fun encryption techniques behind it and all these crazy codes flowing through. But at the end, it's a form of currency. That's all it is. It's just in a digital format. Based upon blockchain, this is the real magic behind cryptocurrencies, is the blockchain technology. It is real. Companies are making a world of difference in people's lives, healthcare to shipping. I mean, blockchain is a very, very strong player. This is what's really helping people get instant transactions. It doesn't have to be a transaction of purchasing. It's just data flows faster through blockchain. It's all based upon cryptography, which is nothing more than just like the ancient form of cryptography, which is the art of writing or solving codes. How it's generated and how coins are created or tokens is through mining. Versus the old school, which is where you had a pan and you had, body of water and you're sitting there sifting through the sand to find those precious metals. Today, it's a little different. We're using precious metals, but they're in CPUs and hard drives. So same concept, you're mining for metal, right? This metal now is digital. So it's a very simple concept. It's real, it's tangible. It's a real market. I've been into some of these warehouses where they've got these mining rigs and it's loud. It's like a bunch of bees buzzing in your ear. It's almost, you almost have to wear ear protection, right? I mean, it is a real thing, but it sure beats being out in the wilderness by yourself. But that's today's market. So what we want to talk about is really the simplest way to go about trading. And the way I'm going to do that is I'm going to leverage my experience with thousands of professional traders that actually make money, right? I'm not going to leverage information from people that can't make money, right? That would be foolish. But professional traders always trade with the trend. If the trend's up, they're going to be buying. If the trend's going down, they're going to be selling. Simple concept, but most people get hung up on really understanding what's the real trend in the market. We're going to talk about how to follow disciplined rules. Remember I said 5 steps. Those 5 steps need to be repeated over and over and over again. And I'm going to give you some sneak peeks of what that really looks like. Pros are patient as well. They only trade when the odds are in their favor. And if the odds are stacked against them, they're going to wait for the right opportunity. And I'm going to walk you through a simple analogy here in a few minutes, leveraging the story of Goldilocks and the 3 bears to try to hammer home this point with you. But this is really what we're trying to do. Trade with the trend, be disciplined, and be patient. Those are the 3 theories of how to manage yourself. All to do one thing, and that's to be able to consistently drive profits. Imagine telling your neighbor when they're beating up Bitcoin that there's no money to be made, and you pull up your account and you say, well, I've actually made 28% in the last 17 days on just one cryptocurrency, right? There are buying opportunities around the clock if you know what to look for. And that's what we're going to talk about today. Because most people look at the market and they think it's just chaotic, it's crazy. There's no real rhyme or reason to how the market moves. Well, I beg to differ on that. The markets move in patterns. It just takes skill and understanding or tools or gurus, if that's the way you like to go, right? To tell you what the market's doing. But the market goes up, the market goes down. It doesn't move in a straight line, but being able to recognize what it's doing. And of course, the market moves sideways. As you gain experience, as you understand more and more about how the markets tick, this is really what you're looking for is spatial intelligence, right? How do I look at the market and well, I could say 4D, right? Not the 3D stuff, but 4D, where it really shoots up at you and gives you that insight into what's happening. Sometimes without even drawing a single trend line, having to understand a single indicator or how to use Fibonacci's or any other complex strategy, head and shoulders, we can avoid managing that. So looking at the chart here, you can see it's uptrend, but this could be anything. This chart could be anything. Could be a stock, could be a cryptocurrency. Most of us, if you invested in Bitcoin, hope this looks like Bitcoin, except for the end of this screen. So don't look here, right? It could be anything. But if you can chart it and you can see historically, you can make good decisions on what's going to happen next. So let's talk about this for a second. What I'm going to help you with today is I want to give you just a different perspective on how to time the market. Doesn't matter what we're trading, right? Let's get over that. We're talking about timing the market no matter what marketplace. And Goldilocks and the 3 bears always rings true to me. And if you remember the story, depending on your stance on it, Goldilocks either openly walked into a house that was unlocked or she broke into it. I mean, there's some funny blogs about this, funny articles, just as a side note, about what this really teaches kids. So, but regardless, we're going to take that away and just look at this concept of the porridge was too hot, the porridge was too cold, or the porridge was just right. And we're going to use that reference for how to time the buy. Most traders are either too fast or too slow when they enter the market. What we want to dial in is being just right. And I'm going to show you some of examples of this. Now, don't cringe. This is not real. This is a mock chart. This is not your money. This is not your retirement account. So please do not get anxious on me. It's just a chart that I drew. So too fast. Now, this is a technical setup. Now, if you've been trained in Fibonacci's or any other Japanese candlestick formation trading, basic support resistance stuff, you're going to look at this and go, wow, that's a good buy. Because if you're trained, like I've been trained previously, then I see a 382 bounce with a Morningstar formation. That's a strong buy for the technical trader. That's not looking at confirmations that I'm going to walk you through. But how many times have you experienced this? You think it's a buy, you see a setup like this, the market hits the top, it reverses down, and now you're in a losing position or you've lost your money. I know I've been in these positions as well, right? So the question is, well, how do I make sure that we actually get in at the right time? Well, let's talk about the slow turtle first. This is where I feel, in my experience, and what I found actually, is that this is where a lot of investors get hung up, is they're too slow to get in. The market takes off, you pull up your chart, or maybe you pull up your newsletter or blog, or you finally get to watching that video that a guru sent out to you a week ago, and you go, wow, this guru just recommended ABC stock's going to take off. Well, then you pull up your chart and you see, wow, it took off, and then you jump in. Well, you're now at the tail end of that move, and you were too slow. You didn't get in at the right time. You should have avoided it, but greed got the best of us, and what did we do? We jumped in, and now the market turned, right? I've been in this position, so I'm not saying this is not something that I've been involved in, but this is really a common, this is probably the most, out of those two examples of being too fast or too slow, this is probably the most common issue that traders run into. So what we've done, and the Wizard and SES Global Financial in this partnership is based upon this premise. So we're going to talk about just right. The key difference here on this chart versus the too fast example is the close of that candle is above that previous high. That's just right. Because what we've done is we've waited for the just right moment, and we got the close above. That is then the start of the trend running. The key to long-term success is to maximize the profit potential of your winning trades. See, I didn't say the best form of success is to avoid losing trades. No, it's when you win, you've got to maximize that win. And the best way to do that is to time the breakout and to catch the full breakout. But to do so, there are techniques and algorithms and simple ways to do that where you can time that full movement. Now, it doesn't matter, once again. Yes, I'm talking about cryptos, and I'm going to be diving into that in a second. But this is applicable across any market. I use this same theory and strategy with stocks, futures. I don't trade futures a lot, but it's applicable. Forex, stocks, and cryptos. Those are the three markets I like to play around with. It doesn't matter. If you can time these breakouts and have that patience, as I talked about earlier, this is how you really catapult your profits. And you can do it consistently. And so how we do it consistently is we've got to have a mechanism and a manner to decipher how this actually works. And so to do that, what I'm going to do is introduce the coin signal scanner. This is our crypto platform. This is powered by the Wizard. Many of you may not have heard about the Wizard because that's been the intent and that's been the strategy around that company. So the Wizard has been around since the early 2000s. And so I've had the luxury of working with the owner and creator of all his products for well over 5 years. And the reason I say it's been his intent that you don't know him is because at the end of the day, what we're looking for is a way, and what he's been doing is he is a warehouse wholesaler. So what he does is he partners up with organizations like my former company that I worked with and others out there and provides the platform to be white labeled and to be sold under whatever organization's name that he's working with. And so what that does is that it puts a paywall up for many people to even have access to his products and services. Well, that's no longer the case. So now we're opening this up to the retail investor. So you don't have to be involved with a $10,000, $20,000 investment before you can even see something like this. Now we're opening up and we're skipping that step in the process. So that's why you haven't heard of the wizard. But I've heard of him, and I've had clients, hundreds and hundreds of clients, leverage his platforms and tools over my years. But it's very simple. Now, I love the scroll bar, but beyond that, we're going to get into the real meats of what we have to do to get the end result we're looking for, which is consistent profits. So when we talk about getting the timing right, the first thing we have to do is understand the trends. Now, I'm not going to do a single piece of drawing. I'll leave that to my daughter. My daughter's 5 years old. She's an amazing artist. Well, I'm her father, so I am biased. I'll let her do the drawing. I'm not going to do any drawing, though I know how to technically analyze a chart with all the fancy stuff you can imagine. But what I'm going to be able to do is, with a few clicks, determine and choose the trend I want to trade. What type of trend? Am I in retracement? Am I in sideways? I'm going to be able to do all of that in the most simple and straightforward way possible. And that's with a few clicks. And so what we're going to do is I'm going to walk you through a simple way to leverage these tools. Because at the end of the day, it's all about saving time and being accurate. Tools are great. Technology is great because it gives you consistency the way I see it, right? So what we're going to do is I'm going to walk you through 4 colors that you need to know. And we're going to talk about simple trend indicators. Now, on this software, we talked about how important trend is. There's 2 greens. There's a bright green, which is very bullish. Depending on your monitor setup, it may be darker green than what it looks like on my screen. But regardless, this is bright green. It's very bullish. It's the strongest uptrend. And it'll make sense when I tie it together in a moment. But just know, bright green is the strongest bullish momentum or direction. The dark green is less bullish. Okay. Now, the other side of this is going to be simple. The red is going to be just the opposite. The bright red, very bearish. Dark red is just simply bearish. It's just not as bearish as the other one. So when I come back, I just want you to know those codes, very simple to understand. So when we come back in here, you can see we've got these arrows. I'll zoom in so you can see a little bit more clearly. Okay, so when we look over here in this section, I've got 2 dark greens or 2 bright greens. I've got 1 bright, 1 dark. We always look at these arrows in pairs. Reason why is we're looking at short-term direction is on the right, long-term direction is on the left. You don't have to remember this. It's listed right here on our trends. Trend, short-term on the right, long-term on the left. Once you understand how this works, what it does is it removes the need for you to have to use charts and draw your trend lines and run your own analysis. At first, I had to get used to it. It took me a few days to get accustomed to it. But now when I look at this, I can see movement on a chart just by looking at colors. I can imagine in my mind what the chart looks like when I see a long-term bullish, short-term less bullish. What that looks like is a strong run up and a very small retracement. That looks like a 382 bounce if I'm a Fibonacci trader, if that makes sense to you, right? But when I come up here, the most important thing is we get a historical look at what's happening. And I promised you, I'm going to show you how to find buying opportunities in the crypto market, even though Bitcoin, Ethereum, Litecoin, Ripple, Zcash, Neo, Digital Cash, Monero is the only one that has any green on it, and Bitcoin Cash. Everything's bearish. The major 9, as I call them, the big 9, are all, except for 1, bearish. So how do people make money? Why are people trading $19,000 a second across just 2 exchanges? Why? Because they know how to find the buys in the market. That's why. Why would you trade if you can't make money? Why would you be trading $19,000 a second worth of volume across 2 exchanges if you're not making money, right? Well, the key is how do we make it? The first step is we've got to know if I have to buy, I can only buy in the US. I can only be a real buyer. Well, then what we want to do is look for what? Uptrends. So I'm going to get this all the way down to its pure bear form. Okay, so this is the scanner. I'll walk you through what some of this means in a second. But just know that right now there's 618 symbols available that are actively being traded in the crypto world. Now, many of you know that there's way more symbols than 600. there's close to 15,000 different symbols that you can trade. Now, symbols in this market is like the Forex market where you're talking in pairs. So for example, this is Litecoin versus Ethereum, very similar to the euro versus the US dollar in the Forex. They're pairs, right? There's 15,000 pairs to trade. Some of you may be going, yeah, but your software only has 600. Well, the reason why is because these 600 are really the only ones that are being actually traded. There's volume behind these 600. That's one of the first mistakes that happen when people try to translate what they do in the stock world or even the Forex, especially the Forex world, into cryptos, is that they expect that there's volume, that there's buyers and sellers, but there's always not. Some of those highlights, when you see people that I made 4,000% on my crypto coin. Reason why is they happen to be involved in an ICO at less than a penny. It goes live to the market. It goes up to $1, but then nobody ever trades it again. It's not a really indicative of what the opportunity is. So what we've done is we've only focused on things that are actually trading, currencies that are actually being traded, so you can get in the market when you want and have the best opportunity to get out when you want. That's one of the big differences between this market. So once you get over the fact that you've got to do one of two things here, right? Number one, what you have to do is understand the exchanges in which you have your accounts. It's very simple. It's not like it was a year ago when it took 4, 5, 6, 7, 8, 10 days to open an account. I just opened up a new account with BitHum, and I think it took 24 hours to open up an account. So here's step number one. If you're going to trade cryptos, you need to be in an exchange, right? You need to have a wallet and an account where you can trade at least one of the top, I would say, top 10 exchanges today. So this feature is important because you want to be at an exchange where there's money being traded. And the way to do that is look at the volume. So this is a 24-hour volume. So BitHum's at $1.4 billion in money traded in and out in the last 24 hours. Now, interesting about Binance, it's at 395 million. That's a lot of money. This was a day's, this would be at about $1 billion at Binance. So Binance fluctuates up and down. Last 24 hours, it's been $400 million in volume traded, right? So if you stay above the 250 million range, as far as an exchange is concerned, you should be able to find buying opportunities in buyers and sellers, right? So that's trick number one, is don't get stuck at an exchange where there's no money being traded. The second thing you want to do, and we've taken a lot of the work out, is you want to go to the market cap, and you want to understand the market cap and look at volume traded per coin. So this will give you a strong indication if there's really an opportunity to buy or sell whatever coin you may be looking at. So for example, we can look at the last 24-hour changed. Everything on here is searchable. So you can see ACTP symbol. The market cap is 60,000. The last 24-hour move has been 774% in the last 24 hours. But here's the kicker. There's only been $1 in volume. This is where a lot of people prey on ignorance when it comes to marketers or products or salespeople, whatever it may be. They're touting, or really the exchange or coin ICO. I mean, oh, look, our coin went up 700%. Well, great. You can't buy that when there's only $1 in volume. Even this one down here, Our Coin. I mean, that's a great name, Our Coin. 316% in the last 24 hours, but there's only $2,500 traded. You can't do anything with that, right? So to really get into movers, you've got to find coins that have been trading, like even Bitcoin, 5 billion still being traded, even though it's at $3,600, right? Tether, 3.4. I mean, that's standard. Ethereum, 2.3 billion. So to really know how to be a normal trader, if you want to try to translate what you do in stocks, futures, well, not really futures, that's boring. So stocks, options trading, Forex trading, ETFs, right? Still boring, but ETFs are there, right? You've got to know what to look for to see, how do I get in and get out? Simple. Get an exchange that has money. I showed you how to do it. You can Google it, or you can just hit a button. But then you also need to know what's the market cap and what's moving, right? That's simple. But the way I like to do it is, number one, let's find the trend, right? So if we're in the US, I would love to be able to sell short here. We probably will here soon enough, but currently we can't. So what you're seeing here is an ability to filter through those 600 coins. Like I said, we're going to be able to walk away with picking which coin to buy, what price to get in, where to put our profits, where to put our stop loss. And then I'll show you how to avoid some losing trades, right? But that's really what we're going to do. And I'm going to do it in a few seconds. So very simple. I'm going to trade daily. I'm going to be conservative. I'll explain that in a second. I trade primarily at Binance. I'm going to filter by exchange. I'm only going to look at uptrends. That's all I'm going to do. My next step, I'm just going to show my results. So in a matter of a few seconds, I've now scanned through those 600 active crypto coins. And now I've got 17 that fit my criteria. So of those 600, I whittled it all the way down to 17. 17 out of the 600. I'm looking for only uptrends and only real pairs at Binance. So I don't have to look at all the other stuff I can't even trade. So this performance composite up here is basically a summation of those 17 symbols and what's really happening with them. So what this is saying is that there are 17 symbols. Up here, you can see there's 14 winning, 3 losing, 82% win rate across those 17 active trading signals. So that's all I've done. Now, this win rate is an average of 13 days held. So we're not talking about you're holding these trades for months. It's 13 days. So when I scroll down, this is what we get. So you can see Litecoin, and these are big coins. So you're not going to get this, as I mentioned earlier, these whiplashes of, oh, this is some gimmick coin that just came on the market. You're not going to get that here because we're only trading actively traded coins out there. So you can actually do something with it and not just feel good that you can look at a 2,000% coin that just moved one day and it jumped up that much. So look, Litecoin, Ethereum, big brand, big names, uptrends, you can see it here. But look at the information we get. So this entered us on January 11th, 2019. That's why there's 16 days being held. Gives you specific entries at the long. Here's your target, and here's your stop losses. That's what these signals do. It gives you very specific instructions of how to go about your trading. So let me show you what it looks like on a chart. Now, I'm not going to draw on it. I told you I wouldn't. I'm not. I'm using this to show what it looks like. So when we look at this, there's the same data on the trading signal. So on the 11th, this was the entry at 0.265920. Now, one of the biggest hangups in this market as I walk through this is, especially in the US, people have a hard time understanding the fact that even though I'm trading Ethereum, what is that costing me, or what does that equate to in US dollars? Because 0.265920 is a lot of decimals. If you're a Forex trader, that's pretty close to what you normally look at, 4 or 5 digits after that decimal, right? So you're used to seeing that stuff. But traditionally, stock investors are probably like, what number is that? Easy way to do it, right, is to know what you're investing and how much money you're going to make. So I have a simple spreadsheet I use. All it does is it takes the entry price multiplied by the current price of the base. So it's Ethereum. So that price times Ethereum will get you your entry price. So I like that step, so I know it's a per share number, right? So if it's at 0.265920, then I just jump it on a spreadsheet and I can quickly know, well, that means it is trading at $30 a coin I buy. So if I want to buy 100 coins, well, 100 coins times 30 is 3,000, right? So it's the $3,000 trade that I'm entering. So when it moves up and hits, 50% target, right? And let's say I make 50%, then I made $1,500 on that trade, right? So it's a simple step, takes a few seconds, but it helps normalize what some look at as a complex market. So all you do is you take that price times the current price of whatever the last pair is, the base, and that's how you know the dollar equivalent. So it keeps it simple. But what this does, if you remember my just right scenario, is you see how it timed this breakout. The long was at 0.265920. Now, you can do it manually. You can do it all day long by just doing it yourself if you wanted to. But what I found is that the easiest way to do it is to use algorithms and tools and automation. So what I want you to pay attention to is you look back on January 10th. January 10th, you see the box in the top left corner. It says the high is 0.265820. We talked about timing the market, right? So if we go back to the just right, Look where the signal came in at, 0.265920. See, it was 820 on the 10th. The signal was 59. So basically, the software and all the algorithms said, if we breach the previous high because we started to have momentum up, then that triggers the entry. So without any drawing, without any analysis needed other than clicking a few buttons, no matter what Bitcoin is doing, this is a long call. And Bitcoin's been bearish for several months now in a row, right? We had a little small run for a few days, but it's been bearish. But look at this long call. And currently, this position is up 7% in 16 days. It's very close to a stock. I mean, I'm sure you'd be excited and happy if you had a stock that was up 7% in 16 days, right? Yes, it's not that sexy stuff you see advertised where it's like 10,000% in 1 minute. Well, that's not real, okay? It may happen to one person, but that's not a normal thing. And I don't like to talk about things that are over the top and obnoxious. That's obnoxious in my opinion, right? But that's a good solid return. Now, there's also bigger returns in here as well. And there's also losers. Everything's transparent. That's what I love about this. It's transparent, right? Any trader wants transparency. But as we walk through this, the reason this works is because it times it just right. And I'm going to go through another example. Here's EOS, Ethereum, 0.020010. Okay. Back here, we got in this trade. Let me just confirm the day of entry. I just hit all time frames. All it does is list out everything below, every time frame that's tradable. There's a buy. We'll walk through that in a second. Daily entry January 17th. So if I look again, January 16th. So this candle here, this bullish candle, look in the top left corner, the high was 0.02. Remember the just right example. We want to catch the breakout. How do we do that? We set our limit market, our buy order, our limit order to buy on top of above that previous high, right? That's how we can make sure that the market's taken off in our direction. And look at the long, 10 points above that previous high, right? So you can do it manually. Once again, you can do it manually. You can draw your stuff. Hopefully you get the right trend. And the trend is the most important step. But look how automated this is when it comes to timing that breakout. And so all you do at this point, and we're going to evaluate these trades below. I'm going to evaluate this setup. So what we're going to do is we're going to go down to the 30-minute time frame. Let's look at this chart, EOS, and we're going to drill down into a 30-minute chart. So let's go to the 30. All I'm doing is going to change the time frame because I saw a buy order down there. I'm going to click buy signals so we can just look at and limit the buy signals. So we've got 3 that are very bullish. Now this is stack ranked. So we've got on the top, the strongest trend going up is WTC/BTC. So Walton Bitcoin. I can click here and see the volume. So just here, by just clicking here, I can scroll down. Remember, volume's important. We've got to see activity. We have to see activity. So in the last 24-hour volume, WTC has had $869,000 in volume. That's a decent volume for a mid-range crypto coin. And then down here, Bitcoin is 5 billion. So there's a lot of activity, obviously, with Bitcoin. But here is important to know that there's volume being traded. And so this is where you get a very quick snapshot of what's happening. So look at what happened. This is what it looks like when we're in a pre-buy. So we're not in it yet. So this is where we start setting up market orders, our limit orders up in advance so we can enjoy our day. Nothing about this, you have to be in front of your computer or charts or account and trade. You can set these things up to alert you, to walk you through them. I'm here just to walk you through what to look for, how do we pick, right? So with this is the information we get. What I always do is I go in and take a snapshot look at the charts themselves. I like to see graphically what's happening. So take a look at this. We're looking at a 30-minute time frame. On the top here, you've got 15-minute, 30, 60, 120, 240, 480 daily and weekly. And you have arrows next to them. Same color code. So on the 15 short term, I've got a very bullish. 30 minutes, very bullish. 60 minutes, very bullish. 120, bearish. 240, bullish. You see how this is alternating down? if you can get, when you're trading, if you can get the time frame above you the same color as the chart you're looking at, that's a strong opportunity to buy or sell. So if I've got a strong red stacked next to each other, those are going to be good opportunities because you've got your time frames in alignment. So many of you have been taught that the larger time frames dictate the overall trend, and they do. But if we look at this like a hierarchy of an org chart, right, of a company, imagine a company. Who's on top? CEO. They set direction and vision. But who really gets the stuff done? The entry level, the ground floor, frontline employees. They actually make it happen, right? You can have a vision, but a vision without a team is more like a dream, right? So same concept in the market. Your weekly is setting the overall direction, but what really makes it happen are these small time frames, the 15, the 30, the 60, 120, because these turn first, right? They're shorter. They're going to turn first. So when I've got a strong bullish on the 30, 60, now, folks, you can just toggle back and forth. You don't need to sit here and redraw lines and pull up 50 charts. You just toggle back and forth. I love this side, and we're in a live 15-minute chart now. But let's go back to the 30. So when I'm scrolling down here, let me get a better view here. Okay, get back in. All right, so when we're looking at this 30-minute chart, what is the just right? We're waiting on confirmation. So the high was 31470. So we in a very bullish situation, right? This was just updated 6 minutes ago. So 6 minutes ago, which is the 30-minute chart, it's 10:36. That's 15:30 GMT. Look at the buy signal. Now, what we would do is we would now then go into our account, setting a pre-market limit up in our account, and if it enters, it enters. If it doesn't, it doesn't. But that way we can time the breakout. But look at the entry, 3140.80. It was 10 points above that previous. Over and over again, that's what this looks for. It's automatic, plug and play, and you run. That's how simple it is to time the market. Now, you could do it on your own. I've already given you the rules of what to look for, or you can let it be automated. And you pop in, you can evaluate your trades. Let's look at Verge. I bought Verge so long ago. Hope it's moving, right? Same concept. Looks like we got a battle on the small time frames. Pre-buy set up. This is how it fires these triggers. It's how it fires them. This looks very strong. Look at this. Bullish, 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 bullish. I mean, these are very bullish. The only thing that's red on this chart is the weekly. And the good news about the weekly is visually, is this the top or the bottom? I'm not drawing anything. I'm just asking visually, what does it look like? It's on the bottom. So I've got the 15-minute. I've got my frontline employees. I got my managers going long. I've got their supervisors, maybe a couple of VPs, maybe the CFO. I'm just trying to use business analogies here so you understand the concept. If you get the whole organization, and I can give you firsthand experience about this, if you get the whole organization thinking one thing and you get the senior leadership thinking another, odds are the employers are going to win that battle, right? Especially with a strong leader up top. They're going to go, well, let me open up my eyes to how business works. Same thing here in this market. The market's going, wow, all these smaller time frames, all you buyers and sellers out there are moving this market up. The way we see that is not by reading articles, not by watching videos, but by understanding what's happening on each time frame. And that's how we do it. And this is applicable, folks. I know a lot talking about cryptos, stocks, ETFs, futures, Forex. Same platform, same types of algorithms, same type of data. What I love about the stock side is we get into sectors and industries, and we get fundamental and technical analysis looped in together on some awesome tools and techniques. But folks, this is the most simple, straightforward way that's backed by 20 years plus worth of real data behind it. So let's walk through it again. One time. I'm going to walk you through trade by trade so you can see firsthand how it works. All right, now we're going to be a crypto trader. You already have a wallet open. You already have an exchange open. Let's say you have an exchange where I've got money at, and that's Binance. So you pull up your chart, you pull up your computer, you want to trade, you've got a few minutes, you've got 30 minutes, and you want to get and see what kind of opportunities are out there. All right, simple step. Let's look at short-term time frames. You want to be in, you want to be out. So we'll go to a 60-minute chart. I'm going to be aggressive on this, but I'll walk you through that in a second. We're going to go to Binance because that's my exchange. I don't want to see everything else. This is one of the unique things. This market is a non-centralized exchange, right? So what that means is that one exchange is going to have stuff that the other doesn't, right? That's one way to look at it. So if I'm only at Binance, I don't want to see other noise and get FOMO or have the fear of missing out when I can't trade something because I don't have an exchange, or nor do I want to have 10 accounts, right? I'm in the US. I'm just north of Orlando, Florida. So I'm going to look at buying opportunities. I don't want to see downtrends. I don't want to see retracements. I want to see the strongest trend to trade. Now all I'm going to do is show my results. All right, so we're at 76% win rate. I like to stay above that. So I want to stay at least above 80% or higher. How do you do that? Well, we go searching, hunting, and pecking other time frames. Let's look for 30 minutes. 30 minutes, same concept, 72%. This is going to be very aggressive. I don't know if it's going to work on the 15. Typically, this is the aggressive trader. Yep, so that's aggressive. But you can see the win rates are 4-to-1. 1.3 to 0.3. So you're more aggressive, more in and out. But let's go up. Let's see if we got any longer term time frames here. 78. We're getting close. Probably going to pop it here on the more longer term time frames. 71%. Let's check out the daily. So now we've got to change our mindset to hold these. Okay, so we're at 82%. So 82%. Now this basket to me has a lot of confidence behind it. So what I'm going to do now is just scroll down. Here's those 17 we started with. And now we're just going to look to see if there's other time frames of these big ones that we can go down with and actually draw in some trading opportunities. So as we look down below, we're going to start pinpointing up and just walking through very quickly. Let's look at Tron. I'm just going to show all time frames. This is the easiest way to do it. So I'm looking at every single time frame. I've got weeklies, dailies, 480s, everything that I can trade, and everything's going in a long position. So Tron looks like this thing is off and running. Aggressive. Look at this, 120%, 28%, 6%. Now this is the only difference here, folks. I'll do it real quick. Conservative is where we're taking profits off at levels. So when I come back in here, just to walk you through it real quick, conservative is as it sounds. You're conservative. So the definition of that and how it's applied is that as you hit certain price targets, you're taking profit off the table. So this says once that first target's hit, you're going to take 50% of your position. So if I bought 1,000 coins, I'm going to take 500 coins and close out and sell at that first target. How much do I have left? 50%. Why is that important? Because your stop loss then becomes your entry, and now you're break even. So automatically, the money management system built in here on the conservative setting is about retaining your account, right? Keeping your money. So once you hit that first target, you take 50% off. Then if you hit the second target, you take the remaining half or the 25% of your original off, and you let your remaining money run. These stop losses are not fixed, nor are those stop losses static trailing stop losses where you say, okay, I want to have a 30-point stop loss that always moves up. This is proprietary. This thing will move up at certain levels. It's not a fixed flat rate or pip count or point count, whichever you want to describe it. That is a powerful tool. So that's the conservative versus the aggressive. Looks like this. You go long and you let your stop loss run. And let me show you what the stop loss looks like. So if you look at Link, so here's the long. This is what the stop loss does. I mean, you can see it visually what it's doing. Here's your long call down here. Look at your stop loss is above it, right? So this thing will staircase its way up or ladder case its way up. And then until eventually this market stops you out. So this is the aggressive side of trading. And this is proprietary. And you can see this pup is up. So daily's up or weekly's up 136%, daily's up 77%. So that's what the different settings are when it comes to this. So let's take a look at trading opportunities. So when we've got Tron rocking, let's look at AirSwap. Let's look at these time frames, see if we can pick any. So see, we got some indecision. We've got some turning in the market. We've got these shorts. We've got some longs. I would stay away from this. This is how to avoid trades. You want to see a clear unification of direction, as I'll call it. So same thing here. I've got a sell up top, sell on the bottom. So weekly selling, 30-minute selling. I've got some buys in between. That's a odd setup, just naturally thinking about it, right? So we're going to, like I promised, we're going to help you avoid losing trades. That's the most simple way to do it, is stay out of the ones that you shouldn't be in, right? So here's EOS, Ethereum, 2 buys, short call, a little erratic for me as well. But just like that, I'm not drawing any trend lines. I'm just looking at common sense. So this is cool. So check this out. So now I'm at Litecoin Ethereum. Look at the 15-minute. I'm not really worried about that because everything above it is bullish. Look, long, 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 long. Guess what we got on the weekly? Long. So those position holders, right? Those that are looking for that 100+% win rates or hit rates and profit targets, that's a good one down here. So we're going to look at Litecoin Ethereum. Let's go to the weekly. We'll view the chart. Look at that pre-buy, right? So 1, 2, 3 strong weeks. We'll find out here shortly what's going to happen. But look at that. What's the call? The just right. So this is screaming buy right now. I mean, look at this movement. You've got 1, 2. Look at it. Look at the top time frames. I'm not drawing anything else on here. It looks like above a 50% retracement. 1, 2, 3. Yeah. So if this thing runs and confirms above this, look at that. That would be above these previous double tops. That's a strong buy. So watch that, write it down, monitor it. Litecoin, Ethereum, at Binance, they're all gonna have different prices. But inside of here, when we look back down time frames, this is a strong setup. Do you guys see why? Does it make sense? Trade with the trend, trade with the probabilities in your side. The basket we were looking at had an 82% win rate. This pair has very strong bullish trends across every single time frame minus the 15, but the 30, 60, 120, 240, 40 daily, weekly. Imagine this on your stock account. Imagine this on your Forex account, right? It's a game changer when you can quickly get a snapshot. What's the trend? What's the best to buy right now? How do I protect myself? Where do I put my orders in an easy, convenient package? But you don't need to have the software to do this. You can do this on your own. Same concept. It's just going to take you a little bit longer. That's all it is. And so because of the fact in this room, I can almost guarantee we have such a wide spectrum of experience. We've got professional traders in this room that are making money and have been making money for years. I have people that this is their first even look at really wanting to become their own trader, and then all that in between. So for my aggressive traders, there's a world of opportunity in ICOs. I don't promote any ICO. I'm not paid by any ICO. That's not the intent of this. But if you do, you can find that information in here, right? So you can see Binance. This is what's interesting. Binance is one of the largest players. So Binance, their ICO raised $15 million. Closed last year, the day before 4th of July, Independence Day in the US, right? But if you're into that, you can come into new ICOs and see what's coming down the pipeline. Transcript, this has been on it for a long time. This launches at the end of this week. Send and receive cryptocurrency like a message. So this is kind of like your Venmo or your Apple Pay. That's pretty interesting. I wonder what they're raised so far, but we'll find out. You can probably go to their website. How do you do that? You can click on it and go see. But this is there for those people that are looking for that aggressive investment in a central place you can trust. Look, this is just data that we pull in, make it easy to navigate so you're not running through all these different sites. But that's really simple, really easy way to tiptoe into a market. If you don't want to buy and actually trade the coins, you can actually just simply invest in ICOs, very similar to buying a stock or investing in an IPO. There are very big differences, though. I'm not saying they are the same, but same concept overall, right? You're investing in that individual coin versus trading between the price changes of a pair, right? But it's all about the money at the end of the day. It's all about return on investment. So if you understand that to get a return on investment, you have to have the skills and the wherewithal to get it, right? Not everybody can just wake up and be a master trader, right? It takes time, energy, effort. Or you can take over and manage and take advantage of tools and technology today to help do it. I mean, this is the whole 600 pairs, 100%, 58 days, 79%, 38 days. You saw how I can walk you through different ways to avoid losing trades by trading against the trend. Remember we talked about that? How do you do that? Well, you look at the time frames. It was a very simple process, right? I didn't draw, like I promised you, I didn't draw a single trend line, didn't draw a single support resistance level, didn't even look at a Fibonacci, didn't have to do any of that. Didn't look at an oscillator, didn't look at a Gann chart, didn't have to do any of that. But it's all about timing it. And I'm not here, folks, for you to buy this right now. So that's not what the intent is. Because this market is so new, you can't even access this full platform until you become educated on what this is and how it really works. What I wanted to do is to really walk you through, from my opinion, some of the most important things out there that you have to do if you want to trade this market. Remember, the first thing you have to do is you have to be able to trade at an exchange. So you've got to have an exchange account at one of those top exchanges out there. The top 10 is an easy rule of thumb, those top 10. The second thing is before you trade, you've got to be able to have a way to see what is the volume of that coin or pair that you're looking to trade. You have to do that. If not, you'll be stuck holding coins like I did early on in my, I still own them probably. I don't even look at them because they're probably worth a penny when I paid $200 for them, right? Those are really the two high level things you have to do. Then after that, it does become a traditional investment. Where's the trend? What do I buy? Where do I buy it at? What price? Where do I get out? And avoid losing trades. It's really the same. Once you get over those things, it's the same like trading penny stocks or dollar stocks, because most of the stuff per coin outside of the 9 majors is $1, $2 or less, right? So it's very good for like the entry or for the home run type hitter, because you can get coins for less than $1 that can move 100%, 200% over 30, 60 days. You can find them. But you just have to wrap your head around getting the exchange, opening the wallet, which we have videos on that, so we'll send to you. All that simple stuff makes it more normalized to what you're looking for. That's all it is. So keep it simple. Like I said, we don't even allow anybody to get involved in this, especially the full platformers I walked you through, until you become educated. But remember the bears, keep it simple. This is what you have to do. Identify the trend, buy strength, sell weakness, maximize profits, cut losses. This is what it looks like. You've seen it, right? This is how it buys. Remember, you want to time the breakout. Once price is contained, we want to catch the breakout. Here's the buys, support, right? That's how we time it just right. Remember the Goldilocks and the 3 bears. Time it just right. So these platforms come with your ability, as I walked you through. You can walk through all the cryptocurrencies that are active. Few clicks, you're on your way. Very straightforward. You can track your portfolios. You can save watch lists so they can be emailed to you and monitor them without being in front of them. Full access is available. But what we'd like to see happen first, before we even present that offer to you, is that you get a full walkthrough of how it all really works. I went super high level today with each and every one of you. But what we have for you is an ability for you to register and receive our 4 free lessons. This is about 30 minutes, 40 minutes worth of content. 4 videos. We're going to walk you through exactly how to find the coin to buy. I went through it high level. I take it way deeper. I go into the price, where to close, and then how to manage your emotions, or really how to put it all together, right? So here's those 5 examples I showed you, folks. This is free. I encourage you to take a next step. If after those 4 videos you like what you see, then you can subscribe. I mean, you can get started with some of our platforms for as little as $66 to get started. So it's not like you're going to have to pay house and home and sell your car, sell your valuables to get this, folks. That's not the intent. The intent is to provide real world valuable information and tools, because that's why I left the corporate world. I want to be a free agent, work with companies I love, I like, I trust, that brings great value. That's why I'm here at Webinar Expo. I know every speaker here today. They are fantastic. Some of them I've worked with for almost a decade. So you're in for a great, great, great presentation today. I wanted to kick this off with pure education, give you guys some free course content, take advantage of it at the bare minimum. Even if you're not into cryptos, watch the lessons. This can help you across all your markets, folks. It's transferable across them all. If you have any questions, feel free. You can type them in here. These guys will get them to me. I'll be able to respond to you. But folks, go to thecoinsignal.com. Register. You'll get my 4 videos. We'll drip them out to you so you don't get overwhelmed. We'll drip them out in sequence for you. But just sign up. Check it out, thecoinsignal.com. We'd like to do that. It's a little buffer for us to get people that are really serious. We're not going to sit here and I'm not going to hard push you into buy something that you're not ready to buy yet. And in fact, we want to work with those that are gone through it, understand what they're getting themselves into, and then we're going to run with you and we'll take you to the top. All right. But that's what I wanted to do today, is get you that introduction. I am at this point early read, so I'm sure you're listening. Seems like a great group. And I think there's going to be a lot of opportunity here for each and every one of you. Like I said, I know the lineup. So if you have any questions, you can drop them in, and maybe Reed or Renee or one of the other support teams can read them aloud. If not, I'll be able to reach out to you when they send them over to me, so that's fine. But just go to coinsignal.com and check it out.
All right. Hey, Matt, we do have questions coming in for you. One of them is, can the signal screener be used to screen futures or commodities as well?
Yeah, so let me just take a quick snapshot of that. I'll show you. I'll pull it up on my chart with you, and you can just see it, or on my screen. You can still see my screen, right? Let me pull it up. Nobody write my login down. Okay, just kidding. It's password protected. All right, so this is what it looks like. Get logged in here. So this is the wizard. Coin Signals is same platform. You can look at it right here. So this is, as you can see, same concept: stocks, ETFs, futures, Forex. The stock side goes into a lot more details. My favorite thing about this, sectors and industries. Here's all the stack ranked by sector, come into industries, come into stocks inside of the sector and industry, pull my wins. I'll give you an idea. This is one of my, I wanted to give this example earlier, but I didn't want to cheat on my crypto advertisement and go into this, but works across stocks, ETFs, futures, Forex, all same concept, all same concept. So great question. But yeah, we've got it for all 5 major markets, really. Anything else there, Renee? I don't want to creep on somebody's time.
It looks like all the questions coming in were similar to that, wondering what it is all good for. So let me see.
Yeah.
If you guys have any more questions, just let us know.
Yeah, and you can always email me at Matt, M-A-T-T, @thewizard.com, and I'll be able to answer any more questions. But Matt @thewizard.com is my contact information. I'm excited for each and every one of you. This is a great event. I've worked with these guys for a long time, like I said, so there's gonna be some awesome content. But just thecoinsignal.com, check it out, go through the lessons. It's all free. If you like what you see at the end of the 4th, there'll be an opportunity to buy. Little as $66, upwards in the $2,000 range, depending on what you want to do. We do offer stocks, ETFs, futures, Forex as well. The stocks, ETFs is a little less than $1,000. The full package, every feed is about $2,000, but you get all the feeds. So that's about it. But you can email me, Matt@thewizard.com. I'll be able to assist you, walk you through. But if not, good luck to you. Happy trading.